Hey guys, I'm Rob Tatro. Today we're talking about the tax benefits of real estate investing and how to optimize your real estate investment tax strategies. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group here at Canaccord Genuity Wealth Management. And if you like what you hear here, guys, go to our YouTube channel, subscribe to it, send us your comments. We'd love to hear from you. And if you want to chat with me about it, go to www.speaktorob.com. We could book a free, no obligation consultation with you to chat about tax benefits of real estate investing. So you've heard me mention this before, guys. You know that I'm a passionate believer that owning real estate makes a lot of sense for pretty much everyone with respect to their net worth. There are so many tax benefits. First of all, you get to deduct your mortgage interest, you get to deduct your property taxes, you get to deduct your repairs, your maintenance, larger renovations, capital expense deductions. So typically, I'm a big believer that you should own it regardless, but most people don't know how or aren't super, it's not easy for everyone to just go about and just start buying up duplexes and condos. So the really neat thing about investing in 2019 or 2020 and nowadays is that you're able to do it directly through your portfolio. So you could actually invest in real estate through your portfolio. You could do it a whole bunch of different ways, and you've seen some of our other videos on this. You could do it through a publicly traded REIT, you could do it through a private REIT, you could do it through a limited partnership, whole bunch of different ways you can do it. But the neat thing about it is generally uncorrelated to the markets. If, generally there's a lower correlation or smaller correlation. I mean, the publicly traded REITs will drop if there's a crash, or regardless you own the best quality real estate investment trust, it will fall if there's a stock market correction. But generally the other ones have little correlation to the market. They're extremely tax efficient, so the income that's being generated is generally classified as either return of capital, which we call ROC in our world, ROC, or it's a deferred capital gain. So your ACP gets reduced, and over time you're converting your income to a future cap gain, which allows you to then at a future point pick a time, crystallize your gain on your real estate, and pick it in that year for you for whatever reason it may be. And also capital gains are way more tax efficient than income. We've covered that before in videos, but just reminding you that income is fully added to your tax bill at the end of the year, to your income, but not real estate. So the tax benefits of having the alternatives or the real estate in your portfolio is the income distribution is ultra tax efficient. The investments, they pay taxable dividends or sometimes even ROC, and they're much better in retirement accounts, or if you have a non-registered account. It's extremely, if you have a corporate account or a non-registered account, it is extremely tax efficient for you to own this, extremely tax efficient. If you have a small business and you're worried about the passive income, an incorporated business, and you're worried about the passive income grind, which is $50,000 of passive income, then starts grinding away your small business tax rate, an easy way to do it if you have a lot of wealth in your corp is to do it through real estate, because it's not going to show up as income in that year for you on your tax return. Something that you need to consider, because that passive income grind can be quite expensive. If you lose the tax rate, the preferable tax rate of, call it 10%, give or take, and you have to pay kind of the top tax bracket in your corporation, that is not the way to do it. You don't want to have to pay that tax. You want to save on it. So if there's a way to do it, we strongly encourage you to take a look at owning real estate in your portfolio because of the remarkable tax efficiency. So it's extremely beneficial for real estate investing, and also on a risk-adjusted returns. Depending if you have good managers here, you could do remarkably well on a risk-adjusted returns by owning real estate. You get a cash flow. Generally, you get a positive cash flow owning real estate. You're paying down your debt over time through the mortgage. And then if you believe in the value of real estate will grow, like I do, that's 3 different ways you can make money owning real estate, extremely tax efficient. If they're unclear about any of this, please guys go to www.speaktorob.com. Happy to book a no obligation consultation with you to chat about this or anything else. All right, guys, real estate investment, you hear it, you heard it from me. I'm an extreme believer, and I think the future of asset allocation is going towards a direction where people will own more real estate in their portfolio than they ever have because of the availability for people to do it now. The ultra high net worth used to be the only people who could do this, and now everyone is able to do this. Every single investor out there is able to get a piece of real estate in their portfolio. It's wonderful. It's dramatically more tax efficient and less volatility for you if that's a concern for you. All right, guys, I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group, Canaccord Genuity Wealth Management. Had a lot of fun today chatting real estate. Thanks for tuning in. Talk soon.